Ladies and gentlemen, welcome back to another Rezolve AI video. In today's episode, we're going to discuss why the stock is down about 6% today. Okay, we're also going to discuss why I don't give a fuck. Simple terms. Basic English here. I do not care. Because next week, we have the catalyst that we have been waiting for in Rezolve. And if anything, this just opens up an opportunity for those that are opportunistic. Now, keep in mind, I am not a financial advisor. I am up a lot in this stock. I am subject to be wrong. So come to your own conclusions. Clearly, do not be a jackass. I think that is the way you can just sum it up. Don't be a jackass. Okay. You know this is not a recommendation. You know this is not financial advice. You know that I know no better than you. Okay. But in today's episode, we're going to discuss some things that are very important. Okay. First and foremost, let's just get into it. If you want to come join the trading community, come find these AI stocks and invest in them before Wall Street does. Check it out, link down below in the description of this video. By now you've heard this, you've heard the spiel. Okay, I will share the trading community portfolio's performance year to date. We are outperforming all hedge funds and institutions. I have not come across another fund with a better return than us. Just point that out. And I will share my position in Rezolve. Did I buy? Did I sell? Did I trim? Blah, blah, blah. Okay. But first and foremost, you have to understand Rezolve just entered and completed a private placement for $200 million. That is a little bit more than 10% of the company. Now, this confirms everything I've said about this stock on this channel. Why? Because the stock, just call it, is up 100% or more in the past, call it 45 days. If you were a fund, you would not give Rezolve $200 million, buy 10% of the company in a private placement 6 days, now what, 4 days ahead of earnings, unless you knew those earnings were going to be rock solid and we were going to get a guidance raise or something else, right? You would not do that. If the stock fell 50%, retraced back to where it was 45 days ago, you would lose $100 million. You wouldn't do that. Those firms that participated in the private placement know exactly what the numbers are going to look like, what the guidance is going to look like for next week. Okay. Rezolve sold 37 million shares at $5.40. So congratulations. Kind of. If you bought the stock below $5.40, valuation support. What does that mean? Again, the stock is up over 100% in the past 45 days. Roughly. I'm just throwing numbers out here. You get the idea. Well, if institutions are comfortable paying that premium right before earnings, not only does it say that earnings are about to be really freaking good, okay, but it also says that if you bought the stock below $5.40, you likely have a winner, okay? It's as simple as that. Now, some people ask, well, why would the company sell 10% of the shares? Well, it's simple. They got to convert some of the gain in the stock into cash. Okay. They are, from what we understand, not yet profitable, or they're very close to profitability, but their professional services division is a little bit more capital intensive. We'll have a better understanding again coming on Wednesday. But they want to pursue M&A activity. They say that just having a good, software, being the first to the market, having patents is not enough to prevent people from coming in and trying to take their spot as the number one conversational commerce platform, which Rezolve is at this point. They need to have M&A that's going to help drive their growth as they can buy severely, discounted assets. So they're getting the cash to be able to do that. Okay. That's number one. The dilution risk is gone momentarily. Okay. We've gotten that out of our systems. We can look ahead towards earnings. I've been talking about a capital raise for a while. This is a much better situation than the company just going out and selling shares on the open market. Again, because if the company were to go out and sell 37 million shares on the open market, there is no valuation support in that. Okay. Could be retail investors with no idea what they're doing buying the stock. Instead, you had a private placement, which is valuation support because institutions are, the ones that are participating in this. So boom, that's a positive right there. And plus, again, no institution in the world is going to oversubscribe to a private placement with a handful of days before earnings and the stock is up 100% in the last 40 days, unless earnings were good. Okay, so that's the long story short of why the company raised capital. They need the cash to continue to grow, to secure their spot as the leader and to not lose that. Okay. What's also important to remember is this company is not like other companies. 40% of shares are owned by insiders. They are invested alongside you. So whatever they do, they, have their personal wealth attached to it. Okay. Which hopefully, makes them act in accordance to create shareholder value. Okay. So that's important. Now, what is going on with Rezolve today? It's simple, yet not simple for some people to understand this. Rezolve is down 6% today. BBAI is down 6.5%. Nebius is down 2%. Applied Digital is down 5.5%. IONQ is down almost 4%. You are seeing a sell-off in some of the stocks that have done the best recently. It's as simple as that. We are heading into a weekend in which the government might shut down coming Tuesday at midnight. Coincidentally, right before Rezolve's earnings. This is not just a Rezolve sell-off today. It's basically everything. Now, Rezolve did very well yesterday, considering we were kind of in this risk-off environment. Rezolve really fought back. So that was good to see yesterday following the private placement. But it's as simple as that. It's algorithmic selling because of September weakness, because of the very strong economic data we've gotten over the past 2 days. I will share the broader market news in this video, the economic data that came out today, all of that. That's it. That's the only reason. And I don't give an F about it. It doesn't change my thought process at all. Honestly, there's nothing at this point that could happen between now and October 1st, that changes my view that the stock is going to rally epically after earnings. There is nothing anyone can say that would justify or make sense in a bearish way why they would do a private placement 5 days before earnings, and Wall Street is jumping hand over fist to buy a stock at 100% premium in 45 days, unless they knew that earnings were really good. These firms know that earnings are about to be really good. If you need any other convincing or storyline than that, you should probably just take your chips off the table now. Because again, no institution in the world would risk $100 million in a private placement 6 days before earnings when the stock is up 100%. No firm in the world would do that. You would say, okay, you have this big catalyst coming in 6 days. You want to raise capital, fine. What's your earnings going to look like? Right? This is not like, again, rocket science level shit here. This is pretty commonsensical. So do I care that you're down a little bit today? No. I actually think, if you want my honest opinion, This is a very positive development. We wanted to see a little bit of a reset before earnings. The RSI is back down to 58. You're back down to an RSI that you were at roughly when the stock was doing nothing, trading between $2.78 and $3.50, kind of bobbing back and forth here, right? You've reset all of the momentum that you had from this rally. So now what can happen is the stock could get back to $8.50, $10 a share. The RSI is probably going to be at like 80, maybe high 70s, like 77. So you have a lot more room on a relative strength index basis to break out from your highs that you were at on September 16th. Like, seriously, if earnings are as good as I think, 200 million, 300 million in ARR potential guidance for this year, you're going to see the stock probably double next Wednesday. Okay, the earnings come out in the morning. Yes, there's a potential government shutdown that starts October 1st. There's different things that could be going on. I don't think any of that matters. Government shutdown doesn't matter for Rezolve. It's not part of the thesis. Okay, is a government shutdown going to be the catalyst that crushes this market? No. In my opinion, no. Okay. So, like, some people that are going to be mad about the stock falling today are basically fighting over crumbs. They're missing the bigger picture here. Now, what I've also said on this channel before that you should pay attention to is insiders own 40%, private companies own 14%, that's 54%. And then you have institutions that are now at about 10% ownership. That's about 74%. Retail, there's a lot of retail investors that are also holding the stock. Impossible to know the exact percentage. But on top of that, you have 10% short interest. So really, you're like anywhere between 30 and 50% short interest of free float right now. Coming October 1st, when we get that kind of guidance that I'm expecting, again, anywhere from 150 million if the run rate remained the same, which there's many indications that growth has accelerated. The company literally said growth is accelerating in the second half of this year. Anywhere from 150 million to 300 million is plausible, doable, reasonable for end of the year ARR growth. Okay. That's going to prompt shorts to cover. You're going to be in a situation where you're going to have short sellers trying to cover. You're going to have institutions trying to buy. And you're going to have retail investors that are trying to buy as well. There's going to be a buying frenzy in the stock. I would not be shocked if October 1st, the stock is up 100% after earnings. A literal double. Stock could be $12, $13 per share. Okay? In my view. You can see this represented here in the utilization. Okay? The amount of shares that are like available, right? It's at 98.68%. It's literally telling you there's not a lot of shares out there. Okay, the float is pretty restricted. You have about $79 million worth of dollar amounts sold short in the stock, totaling about 11.88 million shares. You also have 2.55 million shares today that are being covered on. If you take a look at option activity today, or yesterday, I should say, you had 3 different trades totaling $231,000 with a positive order value of 100%. You had these January 2027 options that were getting a lot of attention at the $12 strike. Add the almost $300 cost to those. You have a break even of about $15 a share by January 14, 2027. Okay, more than a double from here. And those were all 3 of the trades. One was for 156,000, another was for 37,300, and another one was for 37,700. So very bullish activity represented here in the stock. I have not done anything with my position. I have not added, I have not sold, I have not done any of that. Current market value, $81,380 in this portfolio, up 122%, up about $45,000, 13,000 shares, average cost $2.82. I still have these 15 Rezolve 250 calls expiring February 20th, 2026 after earnings. I might look to get out of these. Not sure. We'll just have to see how things pan out. In the trading community portfolio year to date, we are up 176%. Again, I believe we're outperforming all hedge funds and institutions this year. We were up over 200% at one point. So again, clearly after October 1st, I think this performance is going to get a little bit insane to the upside. But I also have 11,000 shares in this portfolio. Average cost base is $2.80. Currently about $69,000 invested in the stock, up 124%, or about $38,000. As I've said before, I do have 1,000 shares in Webull, 1,300 shares in Thinkorswim, plus the 11,000 shares, plus the 13,000 shares, plus the 1,500 shares equivalent in options. Total exposure to the stock, 27,800 shares times $6.28. Current exposure in this company sitting at $174,584. So if I'm right, I'm going to be right big. If I'm wrong, I'm going to be wrong big. And yeah, if you guys want to come join, come get involved in the action, that link is down below in the description of this video. But we do have to get into broader market news today and help explain what's going on in the markets. Now, in economic data today, PCE core month over month came in line with expectations at 0.2%. That was the expectation. Last month was revised lower from 0.3% down to 0.2%, so that's also good. Personal income month over month came in a little bit stronger than expected. The expectation was 0.3%. We came in at 0.4%. Personal spending month over month came in at 0.6%. The expectation was 0.5%, and there was no revision there. So you came in better than expected. Inflation came in line with expectations. You could call it better than expected because of the downward revision for last month. So across the board today, you had some pretty good economic data. Now, final numbers for Michigan consumer sentiment came in 55.1, missing expectations for 55.4. 5-year inflation expectations came in at 3.7% versus the expected 3.9%, so that's really good. Consumer expectations came in at 51.7, missing expectations of 51.8. Current conditions came in at 60.4. The expectation was 61.2, so that missed. And 1-year inflation expectations came in at 4.7% versus expectations of 4.8%. So really today, it was better than expected across the board. Yesterday was better than expected economic data across the board as well. Now, we've had a little bit of pressure on markets, to say the least, in the past, 2 days. Okay? You gotta look through that. That's weird September shit going on. When you get strong economic data like this and inflation that technically comes in lower than expected, including last month's revision, that is a positive development, especially as Wall Street has been nervous about the economy, nervous about the consumer. That is a good thing, right? You want to see the economy doing well. You can see today the odds of a rate cut for October are falling a little bit. You were at 90.8% chance of a cut October 29th. You are currently at 88.6%. So you've fallen a little bit today. Maybe that explains some of the weakness, but I think you can really just chalk this up to September seasonals, really. I mean, that's about it. The Dow is up 0.45%, S&P up 0.22%, NASDAQ down 0.11%, Russell 2000 is up 0.40%. Again, look at the VIX. VIX down 2.39% today. That's a pretty clear indicator that today is actually positive. Now for bonds, 10-year treasury yields are unchanged today. So not doing too much there. Oil is up about 2%, likely on that stronger than expected economic data. Gold up about 1% today, and cryptos, some are up, some are down. It's not a uniformly bullish or bearish day for cryptos either. Now, Donald Trump did make some announcements yesterday as well, which are probably having some degree of a negative impact on markets today. Donald Trump announces that the U.S. will impose a 100% tariff on all and any branded or patent pharmaceutical products entering the country from October 1st. He also put tariffs on heavy trucks that are made outside of the U.S. Now, he has said that if you are a company and you commit to building a factory in the U.S., you will be spared the pardons. So, or spared the tariffs, okay? So, we'll see how many companies announce. And I will just say it has been a while since we've had some big tariff announcements like this. So again, in September, to get these kind of announcements, I'm actually quite pleased with how the markets are doing today, given the size of some of these tariff announcements. Citibank expects that tariffs will increasingly bite. Citibank says we expect global growth to slow below 2% in the second half of 2025. We expect global growth to rebound to 2.5% in 2026. The Atlanta Fed GDP Now tracker is showing Q3 GDP tracking at 3.9% versus 3.3% prior. And we talked about this yesterday, but we were pretty much guaranteed to get a large upward revision to Q3 GDP because of the strong economic data we've gotten over the past 48 hours. Belarus president said this after a meeting with Putin, quote, "There is a good proposal on the table for Ukraine." Belarus president says if Kyiv rejects the proposal, they will lose Ukraine. Moody has said that the odds of a downturn in the next 12 months is 49%. That is actually not true. If you understand how economics work in the 21st century, it's pretty simple. The US economy is so large and diversified. Just think about like if you are a server at a restaurant or you work in a factory or whatnot. Think about the whole supply chain of that, right? You get people coming into the restaurant that are, working different jobs, and they buy food, which benefits the restaurant. They tip you, which you go on to pay your phone bill, your car loan, your house, your blah, 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 blah. All of the trickle down effects from that. You're giving money to phone companies, blah, 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 right? And that's happening with hundreds of millions of people. The economy is too diversified to just slow down so much to cause massive layoffs and go into a recession. We have not had just a recession without a catalyst in 100 years-ish. It doesn't happen. We're too diversified. The economy is too large. It's not, so dependent on one industry like some countries are. Like, I've had people ask, like, why do we not have a sovereign wealth fund and Saudi does? The Saudis do. Well, because their only industry is oil, right? Really. So if oil goes through a hard time, the whole country goes through a hard time. They have to have a sovereign wealth fund. They're not diversified. We are diversified. The economy does not just flip one day. You need a catalyst. You need a shock event. The whole tariff trade situation was a shock event back in April with the, China situation. That was a true shock event. That was a black swan. Nobody's seen April 2nd coming. Okay. But it's since resolved enough to the point where it's no longer a shock event. If we were to regress on trade with China, if we were to go back to April 2nd style, situations, that would become a major problem. That would become a recession catalyst. And I'm on the lookout for that. I don't think we can absorb another trade embargo with China and just walk away from it scot-free again. But unless something like that happens, a major company goes bankrupt, something big happens, we're not going to go into a recession. That's the simple fact. The question really is, how much do we weaken? How many rate cuts do we get? Where is inflation? And really the combination of these is what's important at this point. Trump says if the US government has to shut down, it will shut down. This is also something that's making investors a little nervous because, again, we have today, we have this weekend, we have Monday of Tuesday of next week to get a deal done. Tuesday at midnight, if there is not a deal to fund the government will shut down. Now, I don't think this is enough of a shock catalyst to cause a recession. But that doesn't mean Wall Street won't be nervous about that. Okay. Now, it's good the last 2 days we've had really solid economic data. Okay. That should keep some of the recession fears at bay maybe a little bit. But I can see why this is causing some bit of nervousness. Now, if the historical track record of the government kind of pans out again with government shutdowns, we're going to avoid a government shutdown. There's going to be a last minute deal done. But I do want to point out the longest government shutdown in history was about 45 days. And it happened during Trump's first term. So when he says, like, if the government has to shut down, it will shut down. Like, I think he's serious. China's Premier Li says the world is entering a new period of turbulence and change, with unilateralism and Cold War mentality making a comeback. Trump says the economy is doing well and prices are down. Kremlin says calls for shooting down Russian jets amount to a serious spike of escalation near Russian borders. And here is a image of the states and the contribution to GDP weighted to these states. The ones in red and orange are, well, deep red is clearly in a recession. Jersey, Virginia, Georgia, Massachusetts, Rhode Island, Seattle, okay? Minnesota, Mississippi, Michigan, West Virginia, New Mexico, Colorado, Nevada, Montana, all not in a great situation. Iowa, not in a great situation here. The only states that look like they're doing quite well: Texas, New York, North Carolina, Florida, California. Very interesting chart here. Trump says the economic numbers are great. And Trump says it looks like we'll have a Gaza deal. Ed Barkin says, I see the monthly break-even jobs rate now in the 0 to 50,000 range. Economists lift U.S. growth outlook. Bloomberg's latest survey sees U.S. GDP rising 1.6% in Q3 2025, up from 1.1%, with full-year growth revised to 1.7%. Inflation expectations held at 2.8%. Revised data showed Q2 growth at 3.8%, the strongest since 2023, though economists warn tariffs and policy risks could slow momentum. The Fed's rate is still seen dropping to 3.25% by the end of 2026, from 4.25% now. So about 4 rate cuts. BMO has lifted their S&P 500 target to 7,000. BMO Capital raised its year-end S&P 500 target to 7,000, aligning with its earlier bull case scenario. The bank said the move reflects the market's rally, resilience, and its long-term view of a 25-year secular bull market. BMO credited its investment discipline for strong 2025 performance, including its best quarter in over 20 years. Analysts cautioned, however, that markets are rarely linear and expects a possible blow-off top before stabilizing near 7,000. So what does a blow off top mean? That means a very large rally above 7,000 and then coming back down to 7,000. Still, they see supportive conditions ahead with Fed rate cuts, stronger earnings, broader participation, and no signs of an AI bubble. BMO suggested 2025 could resemble the Goldilocks environment of 1995 through 1996, which I agree with that. Like, if we are going to get an AI bubble, I think it's maybe a 2027, 2028, 2029, 2030 kind of thing. We're still some years away from that. Ed Barkin says unemployment looks a little shakier, but inflation is better. Ed Barkin says there is reason to think there is limited risk of both a big rise in unemployment or a big rise in inflation. So she says that things are about perfect. She's not expecting any problem in either direction, or at least says there's reason to think that. With that said, ladies and gentlemen, let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel. Check out that link down below in the description of this video if you want to come join the trading community. Have a great rest of your day, and I will see you in the next one.